Hello traders, and welcome to another video review. Today is Thursday the 5th of November 2020, and we are going to take a look at the Forex calendar because there are some interesting things going on today. And then of course we are going to take a look at the US markets, mainly on SP500, Dow Jones and Nasdaq, to see what is the current situation on these markets. And as we know, there is still uncertainty on the US presidential elections, so we still don't know who will definitely be the US president yet. This is the Thursday morning, so this is exactly what I'm trying to tell you. Okay, two things very important on Thursday. First thing, there is interest rate decision, as you can see, from Bank of England. As widely expected, they didn't cut, they didn't increase. 0.1% is still the interest rate in England, just as expected. The asset purchase facility has been increased to £875 billion. And as you can see, the bank rate votes and regarding the interest rate and the asset purchase facility were in line with expectations. Right now there is some sort of the monetary policy summary, and of course monetary policy report will be released in a minute, and the Bank of England Governor Andrew Bailey will deliver a speech 11:15. So that's a key event for today. So we will take a look at the pound today as well. So because of this interest rate decision and stuff. And of course 9 o'clock FOMC rate decision as well, without this time there will be statement and the press conference. So kind of an important interest rate decision. The previous interest rate was 0.25. Everyone expects 0.25% as well, so we will see what will be the actual reading. So we will take a look at the pound, the American markets, and we will see what is going on right now from the technical point of view. Please remember, we are still under the influence of the presidential elections from the United States. Everything is possible, everything is still possible, and this kind of a market situation might increase volatility on various assets, including pound, including euro, and of course American dollar. Moreover, the similar situation can be observed on the financial on the American market. So let's just switch to the S&P 500. As you can see here, this is a daily time frame chart, and this is a Japanese candlestick, of course, chart as well. Yesterday we had a very nice day on the S&P 500. The market, as you can see, has been rallying higher and higher. The high was made at the level of 3,486, so pretty much a very nice result, but no new high has been made because the previous one was made on the level of 3,549, and the all-time high is 3,589. But as you can see here, the current market pattern on the S&P 500 looks like a triangle, which means this kind of a range trading inside of the triangle might be continued for some time now, because there is still wave D to be made, and of course wave E. Please remember that the wave E can even be terminated at a little bit lower. It doesn't have to go straight down towards the let's say 3,250 level. It can be terminated like for example in the middle or somewhere here, which is absolutely fine for the wave E. This is the tricky one, so please bear this in mind. So far, market reacting with enthusiasm for the current situation. So 1, 2, 3, 4 up days since the low at the level of 3,232 has been made. Is trying to of course, market is trying to tell us that we can still rally towards the high of the wave D. The similar situation can be observed on the Nasdaq. This technology market, as you can see here, has been rallying as well. Very good day, the best since September. I think it rallied towards the level of 11,282 yesterday. So this local technical resistance almost has been hit. Sorry, it should be here. There you go. Almost has been hit. The technical resistance for today is 11,918. But as you can see, we still are making this triangle. We are currently on the wave D. There is still wave E to be made, and as soon as this wave is made, we can continue the move higher. We can continue the move up on the Nasdaq. The next target is 11,918. The other one, let me just put it on the chart. The other one is, of course, the high of the wave B, which is somewhere around the level of 12,258, and then, of course, all-time high at 12,471. So we will see if this scenario will play out. So far, it looks good, and the market is the technology market is reacting positively on the current situation. But please remember, this is very high jump in volatility on this market. And the last one is, of course, the Dow Jones, and there's a kind of a different situation here. We had a nice update yesterday, fine. The high was made at the level of 28,288, fine. As you can see, there's a very nice pin bar made on the 13th of October 2020, and since then we've been going higher and higher, and of course the presidential election is helping the situation to maintain. But as you can see, this low is lower than this low from 24th of the September 2020. So there is no triangle here. It might be simple A, B and C corrective pattern, and now we are rallying towards new highs at 29,197. So that's the high that the bulls right now have in mind, and this is the target for bulls for the next days, of course, if the situation will be just like it is right now. So let's just take a look at the pound because of the interest rate decision. So what is going on there? As you can see, there is almost no influence on this event, because it was mostly foreseen by the market participants. It was already in the price, I think, and today's reaction on the today's market reaction is almost unchanged. Let me say, it's very mute for sure, but the day is still developing, of course. We still have plenty of time to close this daily candle. So far, all of the bullish attempt to break above 61% of this wave retracement, 1.3177, has failed, basically has been capped precisely on this level, 61% of the Fibonacci retracement. And it looks like even when bulls are trying to break above 50%, 1.3081, they are still being capped, they are still being stopped, and there is some kind of a bearish pressure here, which is very clear that bears don't want to see any sort of the breakout above 61% of the Fibonacci retracement. So please have this in mind for today. The yesterday low, which is at the level of 1.2913, will act as a intraday support, and of course the local high, yesterday high, 1.3139, will act as a technical resistance. But so far the market response is muted. There is almost no volatility on the British pound, despite the fact that the interest rate decision has been made. So that's everything for me for today. We will see what will happen on the market of course, tomorrow, and tomorrow is a big day. NFP Friday non-farm payrolls data will be released from, of course, United States. So stay with me in the mornings so we can do some nice analysis of the euro dollar, and I think the most appropriate will be gold as well. So we will see what is going on these two markets. So thank you very much for this time, and see you guys tomorrow. Bye bye.